Yeah, I mean, the real work generally has nothing to do with the payment. It's compliance, it's risk management, it's user interface and user use cases. I mean, everybody's kind of hooked up on, hey, I'm going to move money in seconds. And then that's great. Like there's a ton of use cases for that. But just remember, the speed is one element in a whole bunch of elements that businesses care about. Friction is important to move money. I need to know who you are to move your money. It's not going to work any other way.
Hello, everyone. Welcome back to Fintech Garden podcast. Today's episode and today's discussion is a topic we don't touch so often and we don't raise so often in our podcast, but is very, very crucial and important. Besides this is a topic where not so many people are ready to speak about, and not so many people are ready to open the cards and to see, hey, we really have a problem here. We are very happy and very lucky to have here Marwan Forzley. I'm happy to see you here. Hello, Marwan. How are you?
I'm very good. Nice to see you again.
We met at Money 2020 conference in Amsterdam several weeks ago, and we had a very interesting discussion there. We discussed about, crypto to fiat. We discussed about compliances, the innovations that are moving faster than we can even succeed to, cover those innovations with compliance, for example. It touched a very interesting thing, and your response was absolutely unique for me. And when I heard this, I said, listen, we need to develop this story into a separate podcast and to full episode and to discuss about this. Everybody now are running for speed. If it sounds like a tautology, but it's really like this in fintech. We try to improvise and to improve our rails. We want instant settlements, crypto to fiat, fiat to crypto in a second, everything to be quick. FedNow, like projects like FedNow, even Swift announced it, their cross-border blockchain operations and products. Everybody wants to transfer money cross-border very quickly. And majority people just forget that exists compliance behind. Compliance, which all the times is the behind of innovations. Not because compliance are boring people, or it's just because compliance needs time and needs not to be in a hurry to understand what's happening, not to make mistakes, and to keep the gates and the walls strong against the fraud, against different things that's happening around fintechs. You're basically the biggest project. You started fiat to crypto, crypto to fiat around 2014 with Align Commerce. Before stablecoin were mainstream, we also discussed this during our last interview. Now you're running project with huge amount of currencies, with huge amount of customers. You have a very well-established KYC, at least as far as I heard about. You have a very well-established KYC, procedures and onboarding, and your onboarding is automated. I just want to start a discussion from this moment, from this side. How you're dealing with innovations and compliance in the same time, how you succeed to bring compliance or to align compliance to the innovations you're doing in your professional career, in your company, in products you're running. How do you succeed in this?
It's an interesting question. At the heart of all payment systems, regardless of where you are, whether you're in the US or international, there is the plumbing layer, which is basically all the mechanics of moving money from point A to point B. But what happens in practice is that a lot of the payments are conditioned by layers above it. So compliance, risk management, and even user applications. Like what is it that the use case we're trying to service? But the use cases, whether you're doing B2C, C2C, B2B, they're kind of all at the end of the day shaped or constrained by compliance and risk management. And because of that, and especially when you're in a regulated environment like Veem we essentially help fintechs and businesses with collections, disbursements, and stored value accounts, so virtual bank accounts, virtual cards, stablecoin wallets. And we're regulated in the US, so we're regulated in every state. And because you're regulated, it's important to have all the right compliance processes to help move transactions along. Because, by the regulatory regimes we work with, you cannot move payments unless the KYC is sorted out. So that's a blocker. If you don't have that right, you can't move the money. And this is where you need to make sure that a lot of the processes are automated. They're using data sources that are easy to access, that are validated. These are all kind of important checks to make sure that payments don't get stuck. And with that, you're always trying to figure out latest technology, latest rails to work with, not only on the payment side, but also on the compliance side, because they go hand in hand. Like if you have the latest stablecoin technology and you can move money in seconds. But again, compliance is not the latest technology and things are stuck. You're not going to be able to move that payment. So the rails are enablers. The compliance and the risk management are safeguards and guardrails. And if you don't have the guardrails properly set up, you can't move the money. So that's why when you're looking at innovation, your question is very insightful about, where do you innovate? It's an innovation across the board. You got to take the payment part, the risk management, the compliance, the user apps, the customer experience. They kind of all go together. It's not like just innovation in one thing. Make sense?
A quick note from Dash Devs before we continue. If you're building a financial product, the hardest part is often not the front end or the idea itself. It's everything behind it. How users are onboarded, how money moves, how accounts are managed, how transactions are tracked, how compliance is handled, and how operations teams actually control the product. Fintech Core by Dash Devs brings these core building blocks together for banks, fintechs, and crypto fintech teams. It helps you launch faster than building from scratch without being locked into one-size-fits-all platform. Want to see what launching on Fintech Core looks like for you? Scan the code or tap the link in the description to book a discovery call with our team.
Speaking about the rails, I will just quote you here. At Money 2020, you told exactly, once the rail is set up, the actual money movement isn't that complex, and that the industry fixation on rails is missing where the real work happens. So where the real work happens?
Yeah, I mean, the real work generally has nothing to do with the payment. It's compliance, it's risk management, it's user interface and user use cases. And that's what constrains or makes the payment function smoothly. So, it's like, just to give you an analogy, it's like you have a laptop and you have fiber optics in the house. You have amazing internet speed, but then there's something wrong with your laptop and the software is not working properly and it's delaying how much you can access the internet. So the software layer generally is where the issues are. Once you have fiber in your house, that's it. You have fiber. You can access the internet quickly. It's the same thing in payments. If you have RTP or instant SEPA or stablecoins or whatever rail you're using, and that rail enables you to do real-time payments, but the actual layer above it is not moving it, is not able to cope with it in a real-time way, then you're not going to service customers in real-time fashion.
At Veem, your current company, you are gathering data from people from all around the world, at least 110 countries by sure. You have an automatic onboarding, which means you have a lot of data behind where you have access to data that is doing the checks. At the same time, you need to understand that in one country exists one differentiation, how the data is readable. As example, some of the countries can provide in their registries the final beneficiary, the ultimate beneficiary owner. Someone will just send just blank into that field. Some countries, some registries will give you different kind of information. Of course, you have to align this information, you have to map them. It's clear. But for me, it's very interesting to hear from you how you at Veem are succeeding to organize all this stuff into one single piece of machine that works perfectly. And I will be very happy if you will be able to walk us through the compliance and risk layer, of course, as much as you can divulge and tell how you're doing this in Veem when you have so many companies too, entities and individuals who run everyday KC, KBs, and maybe you do some KC, KBs once in 3 months, in 6 months, wherever. Can you please just give us a walk through this compliance procedure to understand how you're dealing with this, the amount of data you are working with?
I mean, it is a complex environment because the reality is, there are environments where there's a lot of data on the customers that you're trying to service. So in general, Western markets, you can get a lot of data on customers. And then it starts to thin out. And that you go to sort of long tail countries and currencies, it really thins out. And then it gets quite complicated. Some of it you have to gather from partners, from customers. It does come in forms that are not consistent across the board. So there's sort of layers to this. There's what is it that you're looking for? And we service B2B and B2C, as well as a small component of C2C. So think of the data records as like you have the company information, you have the person, whether it's the company owner or UBOs, or if you're doing is C2B or C2C, you're looking for the individual. And then you have transaction data, like KYT, think of it that way. And this whole environment varies by country, by size, by use case. There's a lot of variables here that you have to work through. What the job is really to first gather data, then to organize data in a consistent form, in a common that has common consistency to it, so that you map that to centralized sort of system where the data adds up. And then from there, for any missing information, you need to have processes in place to go gather that information. And that is another complicated set of processes, because if you give me, for example, information about you, you're trying to sign up as a business, and I'm missing UBO, and I go back to you and say, I need to have that UBO information. Technology that is needed to go get that information from you. And then I'm waiting for you to supply that information. I got to make sure that that information is correct. So for anything missing in terms of data elements, there's a whole back and forth that happens with the customer to gather that data, so that we have everything we need before we can either open a virtual bank account for you, give you a virtual card, give you a stablecoin wallet, or move money for you. All that requires KYC information to settle and to be in place before all the mechanics of money movement kick in.
Yeah, and if speaking about KB, KC, KT even, I know that different companies now are looking for a full kind of automatization. They don't care about the tokens they have to pay. They just want everything to be automatized. It's some kind of a... First thing is we have to build rails, quick rails on transactions. And second topic that I hear very often in the business environment at the conferences is automatization of everything. People start to forget that simple macros in Excel is already a good automatization of some processes. Your company is pointing out that you're very proud as a company, you're very proud to have quite well automated KC process. And here comes the questions. How did you succeed into automatization where the human validation has to be present? And the most important question, where the fintech are doing wrong with automatization of KB procedure?
There's multiple sub-questions within the question, so let me kind of go through them one by one. So we gather data about customer through APIs. Either you basically hit it up on the API and you pass the data on the customer, or you go through the Cust app, which is a user interface where you input your data there. Now, once the data is gathered, there's a system that decides whether all the information is there or not. So then what happens is you're auto approved, auto declined, or it needs more information. Well, if it needs more information, there's a set of plugins that kick in that gather the additional information that's needed to complete that profile. The decisioning around the KYC, is the KYC data in place, is a good data. That's basically a process that's been in the works for a long time. It's not a quick 2-minute job and you're up and running. You basically, we've been refining, and it's kind of like an iterative process, because every time you do it, you get real customers, you find out, well, we didn't think of this case or that case. So you end up optimizing it as we go. And that's why it gets refined over time and with more data. So that's the decisioning system on whether the KYC is all correct or not. Then there's the manual piece of it. So the key thing about the manual part is really to figure out how to get to customers real quick. Because one of the things that everybody hates is when you need something and you wait for like a week or two before you're able to get it. And I'm trying to make a payment here. I'm trying to open a virtual bank account and I need it today, or I'm trying to send money to this country today. And yeah, I mean, sometimes it's just part of the way payments happen. Information is missing. But what's not good for the customer is to have processes that take a long time before you ask the customer, like, hey, I need more additional information to move that money for you. And so a good chunk of the manual order review is really all about the ability to service customers quickly and get back to them quickly. So we have a set of SLAs just on anything manual. So we try to make sure that if we send you RFI, a request for information, and we get that data back, we're actioning it same day, like within a couple of hours. Like that's really the key thing. Now, sometimes it takes time for the customer to respond to us and to supply that information. That there's nothing we can do. We're dependent on the customers, their own cycles. But once we get that data, we act on it, and we then update the model and hit it again to make sure it's like, okay, do we have all the data we need now? And let me run it again to make sure it passes now so that I can move the money for you. But a lot of this, to your question, it's not a quick thing. It's something that has been built over a long period of time through a lot of iterations and a lot of use cases where every time we do this, we update the algorithm and we enhance it to make sure it gets better and better. So it's kind of like a process, a journey to get here.
In this case, with compliance, we understood that fintech companies, and not only are working on this to solve, to make the compliance to work quicker and faster, not losing the quality at the same time. With Rails, everything, thanks God, it's workable. Now, where we need to focus in next, 18, 24 months even. So the stablecoins will deliver what it actually promised, like instant payments. Where we have to focus?
I think there are two things that are, just to kind of finish up this thought on compliance, and I'll move into the business of it. On the compliance front, I think there is confusion in the market on, can I do this without supplying all this information? Or is there a shortcut? Or is there a way to do this with a bank versus a fintech? Or I hear that a lot, like we're looking for information on KYC information on a customer, and the partner that we're working with, they'll say, well, I don't need that information from another partner. I think that's all like confusing stuff. The regulator is quite clear on what is needed to move money for customers and open up accounts for them. Anytime you try to kind of do a shortcut here, it doesn't end up working. Like you definitely, you're providing financial infrastructure for customers. Sometimes that's called friction, but friction is important to move money. I need to know who you are to move your money. It's not going to work any other way. So I think some of the folks in I'm going to call it the stablecoin industry, but it's like crypto at large. There's definitely a feeling for that, hey, is this all needed? Yes, it's all needed. Whether you're doing stablecoins or Bitcoin, or you're moving money on RTP or SEPA Instant or whatever rail, choose whatever rail you want. The KYC and KYB elements need to be there regardless of the rail. And so you're going to need to, the industry needs to get to terms that in order to move money, you need to do proper KYB and KYC. There's no real shortcuts here. The regulator is clear on what's needed, and you just have to do it. Now, where technology comes in is there's alternative ways of getting that information. So instead of asking the customer to give me a list of like 30 items, is there ways to automate the collection to get key data where you can look up some of that data and then essentially populate it? I think that's where the innovation is really going to be at, is automated access to information and lookups and ways to gather that data properly. So that's on the compliance side. I think the other thing that's important, which is not compliance related, but let's call it risk management. With any rail, there's exceptions that happen. And in the credit card world, there's chargebacks. And in the ACH world, there's reversals and then NSFs. And it's just the nature of payments. And so risk management is another important element. What do you do when these exceptions happen? Because if you're not equipped to deal with them properly, there's a good chance you'll lose quite a bit of money. You got to have processes in place to deal with all these exception cases. Take the card world, for example. If you say, I'm simplifying here just to kind of make a point. If you come in and you say, okay, look, I'm going to go easy on customers, I'm going to process all kinds of card transactions, you're going to have really good volume. The fraudsters will have a field day with your app, and you're going to lose a lot of money, and then have to figure out how to shut down all the bad apples. So if you are too strict in risk management, you're not going to have a business. If you're not careful and you have processes that are not in good shape, you're not going to have a business. You're going to have to find the happy medium where the risk management is really looked at in quite a bit of detail. And so I think compliance is one angle, risk management is another, which all has to do with fraud and losses and what you do with exceptions. And the third piece, which is super important for the stablecoin world, is finding use cases where the economics make sense. And this is another thing that is a concept that's not really understood in broad. It's kind of understood with select set of people, but in general, the math behind all this needs to add up. It doesn't make sense, for example, to use stable to do US Euro. That market is very streamlined, and I can get FX rates at like bips, very small fractions. So by the time I do the conversions, even at very cheap on-ramps and off-ramps, it's not going to compete with fiat in that particular case. You're going to need to find what use cases make the most sense, what markets, what applications, And stablecoin doesn't have to solve all problems in in payments. I mean, it's just sorting out key use cases is a big enough market. Every rail has its trade-offs and it's all its strength, and stablecoin does have its strength and it has its use cases. Stick to the ones that make a lot of economic sense, because that's where customers find a lot of value.
How long you're in this business? 11 years, 12 years already?
3 years to get all the licenses. So we've been servicing customers for about 7 years, and the first 3 years were just basically getting licenses in multiple markets.
During this period, you are long enough to see how the industry solves the rails, long enough to see and to keep to the watch on the compliance side. And you saw different cases when hard work was taken from one side and put into another bucket. Because, I mean, here we solved everything and we need to move to another bucket. If you could change how the payment industry has to develop, change and say, hey, we need to pay attention to this or that, and all the industry has to go into one single, allocation in 2026, what it will be? What kind of a side of fintech you think we need to focus on?
An innovation in payments that will help the entire payment industry in every single aspect of it is really innovation around, I would call it RegTech, regulation technology. Anything that has to do with compliance processes and regulatory frameworks that are common. Like, I'll give you an example. Okay, so take SEPA. SEPA, there's a whole bunch of countries on the SEPA framework. Think of the US. There's 50 states. Every state, it feels like a country. So when I go to get MTLs, I'm like getting like 50 countries, and I'm living in the same country. Having these frameworks that are common, that cut across multiple states, multiple jurisdictions, multiple regions, will help everybody. So it helps smooth the way things should run, and it provides common infrastructure for everybody to live with. And so I think that usually is a very good infrastructure to have. It's probably infrastructure that's going to have more impact than any other specific payment technology. And the more regional that infrastructure, the more it cuts across a bunch of countries, the more success it's going to likely to have. I think that's innovation that's nobody really, I mean, everybody's kind of hooked up on, hey, I'm going to move money in seconds. And then that's great. Like, there's a ton of use cases for that. But just remember, the speed is one element in a whole bunch of elements that businesses care about. Just think about the US alone. Like, I'm just going to use that as an example. I have customers that want real-time payments, and the same customer wants to send a check. And in fact, they'll have an invoice, and they'll sit on the invoice for the last minute before they pay. They're in no rush to pay. Some customers want speed, some customers want control, some customers want trackability, some customers care about price. A lot of customers say, I want speed, but then they don't want to pay for it. And so they go back to, the longer version of ACH. So you have all kinds of customers with all kinds of use cases and different value points. And the point of it is, you got to give customers different forms to work with. They choose what's important to them. But all this is constrained by the layers above it. So the more we solve in the layers above it, so that's more like, the compliance, the risk management, the controls that customers need to have to move their money, the more it helps the entire industry and all the rails underneath.
Marwan, to be very honest, we have to close this topic for at least today, because we are getting out of time. But as mentioned at the beginning, it's one of the discussions where we touched a topic that not so many people would like to discuss about, because it's just, you have to solve a bunch of problems and a bunch of issues. To be very honest, sometimes even myself, I don't want to solve problems all the time in my job, in what I'm doing. So I understand that it's very humanly to postpone the problem, to put it from one bucket to another, but we have to solve it. We have to discuss and think about the KC, about the, compliance will be not a bottleneck, but it'll be, supporter, at least a supporter for the speed of developing of one company or another. Enabler, yes. But you point out the fact that the RegTech is the future of fintech. And I'm very happy to hear this, because I know some of the people who are developing different products on this side. And I'm very happy that such people as you also confirms this theory that this is the future, or at least next steps in the fintech world. Thank you very much for coming to our podcast. It was very impressive. I got a lot of new knowledge about where the market has to shift, where to look at, how the things are working, where you have the bottlenecks, when you see the bottlenecks. It was very, very good one. And I hope we can shoot some other podcast in the future.
It's great. Thank you for having me.
For the rest of you, all the watchers, listeners, we are here for you. And because of this, please subscribe. We are very happy to share all the information, knowledge we are gathering from inside our community of Fintech Garden. Me from NovaFin with my co-host Igor Tomic that you see in different other podcasts from Dash Devs. We don't do just and only business. We want to share the knowledge with you, want to share information with you, because we know a lot of things how to solve. We have friends, partners, as like Marwan, who is also very professional in what they're doing in their companies. If you need good services, you can write Marwan into LinkedIn or go just to Veem. If you need some good advice or good setups, you can come to NovaFin, or if you need a good technical solution, you can go to Dash Devs, to Igor Tomic. So we are here for you. We'll be very happy to read your comments, and thank you very much for those who are writing comments and writing to ourselves directly in LinkedIn. All the messages we see, and we try to get with the feedback as soon as we can. And thank you for watching us. Subscribe and stay in touch. Soon we'll come with another new episodes.